Most day and swing traders have opinions, sometimes very strong opinions about where stock is headed on a particular day, but they don't have enough capital to trade that strategy in their account. So they sit on the sidelines frustrated as they watch the stock do exactly what they had expected it to do, but they're unable to participate in the move. I'm Seth Freuberg, the head trader of SMB Capital's options trading desk here in Manhattan, and one of the most common questions we get from traders all over the world is how to express their often great trading ideas with small accounts. In this video, we're going to be teaching you an incredibly easy technique to participate in those big moves on high-priced stocks that you couldn't participate in with a small account until now. So stick around. I think you're going to really find this helpful. Hi, I'm Seth Freuberg, and I'm the head trader of SMB Capital's options trading desk. SMB Capital is a proprietary trading firm located in Midtown Manhattan, and we provide capital for options and equity traders from all over the world, trading both remotely and in our offices here in New York City. Now, I'd like to suggest that you click on our subscribe button right now so that you don't miss any of our free trading videos that we produce for traders and investors all over the world. They're really very valuable. Okay, so as almost all traders know, there's an exchange-traded fund, an ETF known as SPY, and that SPY ETF in turn owns a basket of stocks that pretty much exactly mirrors the movements of the S&P 500 index, which is the most widely accepted index of U.S. large-cap stocks. And so it just so happens that SMB Capital has partnered with a firm down in North Carolina by the name of InvestorQuant, who's developed a signal that can suggest with a high level of accuracy on the days that the signal fires off whether the S&P 500 will close above or below its opening price on that particular day. And so the obvious way for many traders to trade that signal would be to just buy shares of SPY because they're essentially 100% correlated with the S&P 500 index, and so a rally off the open on the S&P 500 will obviously have the same proportionate effect on SPY shares. But the problem for lots of traders with small accounts is that buying SPY shares is easier said than done. For example, let's say that the InvestorQuant signal fired off one morning with a prediction that the market is likely to close higher than it opened, like it actually did a few days ago when the market rallied strongly on the first day back from the Thanksgiving long weekend. Well, if you decided to take the signal that day and you wanted to make, say, $300 for each point that the SPY moves up between the open and closing price, you could buy, for example, 300 shares of SPY trading on that day at around $463 for a cash outlay of $138,900. Well, that could be a very steep price for traders and may in fact be impossible for some. And yet you'd only make $300 on a 1-point rally in SPY after having to lay out $138,000 and taking all of that risk for a pretty small return, essentially 0.2 of 1% return, by the way, and that's only if the signal is right by enough to generate a 1-point upward movement on SPY. And so for some traders, that's just impossible because of their account sizes, or just too boring of a return given the amount of capital that they'd be required to lay out to bother. But what if you could make $300 a point on SPY by laying out under $2,000, more than a 15% profit in one day, instead of a profit of 0.2 of 1% on $138,000. Well, for options traders, what I'm suggesting is actually easy to do, and it will be very easy for you to learn this technique as well as its risks and rewards. Now, before we get into exactly how we're going to do that, I wanted to let you know that beyond what we're teaching you in this video, there are a large number of sound, viable, long-term techniques for trading options for income. And in that regard, we're currently running a 2-hour free intensive workshop where you'll be taught 3 of those strategies that real professional options traders use. In that webinar, we're going to be teaching you a really simple but incredibly effective strategy that some of the greatest investors in the world use all the time, plus an option strategy that has a statistical 80% probability of profit month in and month out, plus an option strategy that you can employ with a stock that you like, where you'll make your target profit whether the stock goes up, nowhere, or even goes down a small percentage. So if you'd like to learn these strategies, then just go ahead and click the link that should be appearing now at the right corner of your screen. That will open the free registration page in a new window, so don't worry, you won't lose this video. Or you can register for the workshop at optionsclass.com. It's not often that retail traders can be taught strategies employed by actual Wall Street traders, but that's exactly what you'll be getting through this free online workshop. So click the link to sign up now and don't miss it. All right, so in order to teach you how to accomplish this much cheaper way to get involved in a move on the SPY, we need to make sure that everyone watching understands how call options work. This is going to be quick for those of you who already understand call options, so just hang in there for a minute. Okay, so a call option on a stock entitles the buyer of that option to buy 100 shares of his stock at a certain price called the strike price of that call option, regardless of how high the price of the stock has gone when he exercises that right. So all other things being equal, when a stock price goes up, the price of a call option for that stock will go up, because obviously if you can buy shares of a stock that is getting more and more valuable for a fixed price, no matter how high that stock goes, that right itself starts to get more and more valuable. But if on the day that the option expires, the stock's closing price is below the strike price of that call option, then it loses all of its value, because no one is going to exercise their right to buy 100 shares of a stock at more than it's worth in the open market. Okay, so now with that as background, let's move back to Friday, July 9th, which is a day that we got a signal from IQ, and it was a bullish signal that morning. And so with the SPY opening at 432.72, instead of spending $129,816 to buy 300 shares of SPY, which is what we'd have to lay out in cash to buy those 300 shares, if you do the math, instead of that, we buy just 3 of those SPY calls at a strike price of $4.27. And for those 3 options, we pay a price of $5.78 a piece. And that transaction would be considered in options terminology to be a case of buying what they call a deep in the money call option, because the strike price of those 427 calls are well below the opening price of SPY at 432.72. Now, let's take a look at the cash flow of this transaction. And as you can see, as we said, we're spending $5.78 a piece for each of these 3 options. But remember, each option represents 100 shares of stock. So we multiply that by 100, and we bought 3 of them. So the total cost comes to $1,734. Whereas buying 300 shares of SPY at the open would have cost $129,816, almost 75 times more expensive. Now, let's move to the end of the day, and as you can see, SPY closed at 435.51 that day, $2.79 higher than its opening price. And so by the end of the day, the call's value had increased to $8.51. Now, first off, let's analyze why that took place. And the answer is that, in fact, this option is expiring today, and the owner of the option has the right to buy shares of SPY at $4.27, yet the shares closed at $435.51. So if you want to go out and buy 300 shares of SPY at the close, as you can see from the calculation, you'd have to pay $130,653. But remember, the owner of those calls has the right to exercise those options at a cost of $427 per share. And so he obviously could exercise that right, which would cost him only $128,100, as you can see from the calculation. And so his ownership of the calls saved him $2,553. And since he owned 3 of the calls and the savings per call was $851, and since each option represents potential ownership of 100 shares, it comes down to a per option value of owning that call, because of the discount you'd receive on the shares by exercising those calls, of $8.51. And that's why those call options at the end of the day are worth $8.51. And so let's compare the 2 scenarios. If we sold those 300 shares at the end of the day, we would have received $130,653, and subtracting out our cost of $129,819 at the beginning of the day leaves us with $834 for a return of 0.6%, tying up over $129,000 that day on this one trade. Whereas if we were to sell those 3 calls at the end of the day, we'd receive $2,553, and subtracting out the cost of those options originally, we end up with a profit of $819, almost the identical profit on the share transaction, which involved $128,000 less in capital at risk, as you can see from the calculation, for a return of over 47% that same day on the capital that was deployed for that same exact move in the SPY. And so what I'd like you to take away from today's video is that you don't have to use a huge amount of capital in your account at all in order to cash in on big moves involving high-cost stocks and ETFs like SPY or Tesla or CMG or any other high-priced stock that you can think of. All you really need is the knowledge of how to trade deep in the money calls in lieu of shares of stock, have a view as to the direction of the stock or ETF, and then use deep in the money calls to limit your risk, massively reduce your cost, and take full advantage of the upside potential that your signal or research has suggested. This is how pro traders take advantage of the options market, and now you can do the same thing. Now, just to remind you, as I said earlier, if you enjoyed this video and learned something valuable from it and would like to learn the details of 3 real-world option strategies that professional options traders use all the time, then you should check out the free options class that we're currently running. Just go ahead and click the link that should be appearing right now at the top right corner of your screen. That will open the free registration page in a new window, so you won't lose this video. Don't worry. Or you could just head on over to optionsclass.com to register for this free intensive workshop. It's really a rare opportunity for retail traders and investors to learn directly from Wall Street traders, but that's exactly what you'll be getting through this free online workshop. So click the link to sign up now and don't miss it.